Let's take a look at the markets. They closed today, of course, for the federal holiday, but gosh, the Dow down 8% already this calendar year. That means Varney regular. Shah Gilani's very bearish call is, well, closer to becoming a reality. Do you remember this?
Global macroeconomic issues are front and center. And the most important one that investors have to watch is China. Right now, the Chinese stock market is the canary in the coal mine. If the Chinese stock market folds, and it is already doubled over, hasn't fallen out of bed yet, but it's very close, then all bets are off. The market can easily drop 20%.
Well, when the going gets tough, the tough go to the Hamptons. Shah Gilani joining us now. And Shah, you predicted a 20% decline. You've been very adamant in that, and we've just had the worst start to the year ever. Is this the moment we're talking about? Do we have another 10%, do you think, to go?
I actually believe we do, Ashley. There's not really much that's holding the market up from here. We could get a bounce because we are technically very oversold. The momentum has been so negative that there could be some bottom fishing, some value plays out there. And there are certainly a lot of stocks that were overpriced or seem to be overpriced into the fourth quarter. They'll look a lot cheaper. I think they're going to get cheaper still. There's just nothing really underneath the markets that's supportive of even these levels. I think we do have another 10% to go on the downside, perhaps more.
What is this all about? Is it about China? Is it China's debt bubble bursting, and then that's having an impact across the world? Is that the biggest driver of this, Shah?
That's probably the primary driver, but it's not the only driver. The Chinese economy is, we don't really know. We find out next Monday when we get GDP release from China, and anything below 7% is going to be shocking, especially if it comes in especially well below 6.5%, let's say. We're also going to get some other figures in terms of what they're spending to prop up the yuan. So people are looking at the Chinese market as a bellwether for the economy, and they're going to be looking at the yuan. If the yuan gets devalued, if the market devalues the Chinese currency, that could cause a contagion effect throughout the emerging markets, which is what we saw in '98. This is weighing heavily on the markets, as is, of course, oil. The price of oil down here, putting pressure on the high-yield markets, putting pressure on a lot of regimes around the world that rely on oil for their budget and for their defense monies. So we have a lot of geopolitical issues that are problematic.
Shah, I've got about 30 seconds left. What are you telling your clients? Cash out and put it under the mattress? I mean, what do you do in this kind of environment?
We have just a handful of long positions left in the portfolio. We are substantially short, and we have been short, so we're actually riding this out quite nicely. But, yeah, I think this is a good time to raise cash. There's no reason to go bargain hunting down here. I just don't think the market supports it.
All right. Shah Gilani, thank you so much for joining us. We appreciate it.